This is probably how you mark your supply. You have a bunch of break of structure, and that edge of the very first move. I think this is the common way of marking a supply that you've been taught. And what you expect is for price to trade back to that supply and actually sell off. Price actually trades back to that supply, but not respecting the other block there. Instead, price had to take out that high and then finally sell off. But there's a catch. Why does this thing happen? Let's check. You have another one. You have a demand, and you have inducement. You have another inducement. You have a bunch of break of structures, and like the way you were taught, which is very popular these days, you expect price to take out this inducement and come to trade on the demand, respecting that other block before actually buying. But let's see what happened. Yeah, price actually traded to the demand and started buying, which of course at this time you start sharing your P&L, start sharing your chart to different communities you're in, and at this time you have that euphoria that you're the best trader that there is, right? But just after a few minutes or so, you have this. Price didn't actually get to your TP, although it respected the demand. I think that's what some guys call it, or order block that was there. It left your stop loss with few pips, then finally gave you this euphoria before actually taking out your stop loss again. So all of these setups are kind of for marketing. I think many people teaches this thing doesn't even have a high win rate. But I'm going to explain to you today why your supply and demand fail. Okay guys, welcome to my YouTube channel. My name is Sammy, and in this video we'll be talking about failed supply and demand. I'm not here to debunk anybody's strategy. I'm not here to say supply and demand or other blocks doesn't work. No, I'm here to tell you why your supply and demand mostly fail, right? So first, to be looking at this chart. You can see this chart, and we have price coming from a premium selling down to what, a discount. Then we have a clean, I think people call this what, a supply, if I'm not mistaken. And you also have another supply here which has a lot of break of structure. I think the way you know it is for a supply or a demand to be valid, it needs to have a break of structure. I think that's how it's commonly said, right? It needs to have a break of structure, and it needs to be leaving that zone impulsively, something like that, if I'm not mistaken. Here you have a supply with a break of structure, and let's do the popular markup real quick. So we have that second break of structure, we have the third break of structure. Now you're expecting price to respect this supply, right? And don't forget, we also have a supply up above here. So the way I see traders trade is like this. So I'm just using, I don't trade like this, I'm just using as a point of reference from the mistakes to outline the mistakes you've been making, right? So let's say this is a break of structure. You have the second break of structure, third, and the fourth, and we have the first supply with the second supply. And let's say you trade like this and you wanted to take the sell. You pick your sell from here and price took you out before actually selling, if you are targeting this first low. So you see what price does. Price took you out before actually selling. And why is this? This is because you're looking at this chart the wrong way. It's not about the supply, it's not about the break of structure. The chart is all about liquidity. Now, what's liquidity? I'll say that every highs and lows on the market, are liquidity. Every highs and lows in the market are liquidity. That's how I'm going to explain liquidity to you. So in case you're wondering what is liquidity, what does it mean by liquidity, it's not about structure, it's not about supply, it's not about demand. You can see this low that was here, price took that out, which is a liquidity. This low, price took that out. This low, price took that out. And some people are marking this as what a break of structure. But if you look at it from a different angle as what a liquidity, you know that this is the wrong way to mark your chart or the wrong way to analyze. I'm not debunking your strategy. I'm not saying that supply and demand doesn't work. Of course they work, but it becomes very rare. Like before you see supply and demand work, it's very, very rare, right? So let's say I'm not going to use this as my supply. Rather, I'll use that as my what? My liquidity, which is a buy side liquidity. You can see that. So how do you trade liquidities? So in liquidities, before you take a trade, price must take out the liquidity. The price is not respecting this high price as a supply or as a demand or as another block. Price is not respecting the high in the concept of liquidities. In concept of liquidities, you want price to take out any high that there is, right? Before you actually sell, you can sell or you can buy to the nearest high. That's our trade, right? So once price takes out this high, this is the 1 hour time frame. So I'm very certain there's going to be a confirmation on the 15-minute time frame or the 5-minute time frame to pick a sell from here. So first you want price to take that high. Without price taking that high, you're not doing anything. If you want to use that high as your supply, you can see as the first instance, price took out what the high, which means it's going to take out your stop loss first before actually selling. But if you wait for price to take out the high before selling, then you are on the right side of the market. Now, I'm not saying supply and demand doesn't work. Like I've made this statement over and over again before. I'll start hearing some hateful speech or some, hateful comments. I'm trying to say that for your supply or your demand, expect price to take out stops. So you don't want to be doing this. You don't want to be putting your stop loss at that very high and looking for a crazy risk to reward ratio using the order block or your refined order block, the way I think people teach. You don't want to be doing this. What you want to do is wait for price to actually take out that high. Once price take out that high, you can get a confirmation on the lower time frame to pick that trade. And this is how you can trade the liquidity concept profitably. Now let's look at the the supply that's above, and look at this supply. So you're expecting price to respect this supply, right? Because it has an impulsive move leaving that zone and series of break of structure. But what happened here? You can see this price actually takes out that high. Are you seeing what's happening? So you want to trade this profitably. Don't use that as a supply. Don't mark that as a supply. For instance, you mark that as a supply to pick your trade like this. Like I think it's been taught in many YouTube channels, and I see many people using this on Twitter, on Instagram, and it's just too common that I don't see how it works in any way, right? So if you do this, you see your stops will be taken out first before price actually selling, before price actually starts selling. And this will cause you to FOMO or revenge trade or over trade, and all the frustrations, all the emotional fight starts kicking in. But what do you want to do first? Don't use this. You can see the first respect on that supply and demand. Don't use that. Don't even pick that and think, oh, you're a master of supply and demand or whatsoever. What you do is, that's your supply, right? Fine. Don't take that as a supply. Take that as what? As a buy side liquidity. Once you take that as a buy side liquidity, there will always be a OT, an optimum trade entry there for you to trade. Let's say this is your confirmation on the 1 hour time frame. You want to use that 1 hour fair value gap, and you pick this sell from there, putting your stops just above that high, your entry at the beginning of that fair value gap, and your take profit at the first obvious high. You're getting 4 risk to reward ratio. You can see, and this chart played out nice, even went on to sell further. You can see this. So the reason why your supply and demand fail is that you're not looking at it from the liquidity aspect. You're looking at it from the institutional order flow or whatever you've learned so far. So what I'm trying to say is unlearn that particular concept and learn the concept of liquidity, that every high, every low is a liquidity, and price needs to take that out first before actually returning. You should understand that. I don't know how you trade, but I'm not debunking your strategy, right? Now let's look at another example. Okay, so we have this chart like this, and for those of you that trade supply and demand, I think you um you want to look at this, right, in a demand as okay. Let's see, for those of you that trade supply and demand, um I'm using your reference now, your approach to the charts. So this is our demand. If I'm right, if I'm making any mistake to this approach, please you can use the comment section to correct me. Okay, so this is your demand. This is how you mark your demand, if I'm not mistaken. And this is your inducement. I think I do see some people chart like this, and I feel like, oh god, no, this is a mistake, because you are putting your stop loss in a place where price is actually going to take out. So let's say this is how you mark your chart. This is a demand, this is your inducement, this is your inducement, and you have series of what, break of structure, very common. So we have series of break of structure there, and that's it. And you have another one here before price returns. So during this return, you're expecting price to do what? To respect your demand, because it has break of structure and it has an impulsive move or something. I think that's how you were taught, right? But what happened here is shocking, because at first price respected that demand. Yes, if your stop loss was not actually too tight, price will respect that demand. And let's say you're taking profit at this next high, right? That's what you want to do. But what happens? Price give you profit at first. So some people, they'll set their take profit to, sorry, they'll set their stop loss to break even and let the trade run. But for those of you that don't use break even, you can see this is actually a brutal sell, because price give you that hope the first time that, oh, this is actually going to sell and this is actually going to buy, right? Then all of a sudden brutalize your stop loss. And this is very bad, because there is a draw on liquidity below this low. Now let's look at it from the liquidity aspect. Erase all of this, and this is what relative, or let me say equal lows. You can see that these are equal lows. Look at that. And equal lows in the concept of liquidity are what? High priority. Like I said, every single high are liquidity. Yeah, but once it comes to equal highs or relative equal highs, price prioritize those highs than single highs. So once you see this like this means that there are a lot of liquidity seated below here. So price needs to take that. Once you take your entry from this point, that means you eventually become the liquidity, because you are violating the liquidity concept. Now once price takes that out, you can see price needs to take that out. You find your confirmation. It could be breaker block, could be OT, could be coach, could be whatever you use, could be fair value gap, could be void, could be new week opening gap. There are a lot of confirmation entries out there, and you pick your entry from that void, price repricing into that void, and you buy to the what, to the high. This could be a swing trade of 8 weeks to a warrior. You can see price actually bought to that high. You can see this. But some people want to use this level as what, a demand. Unfortunately, your demand and supply will always be taken out. Use the concept, approach the chart with this liquidity concept, and trust me, you are going to unlock another new world. So thank you for tuning in, and if you find this video helpful, please subscribe and like. Until next time, be safe.